in productivity is in knowledge workers. We think there will be at least a fourfold increase, probably more, during the next 6-7 years. And knowledge workers account for $13 trillion in wages and salaries. So think about that. The productivity, one person can do, 4 times more than he or she was able to do, a few years ago. We're already seeing this with coders. Coders, their productivity already at this very early stage is up anywhere from 50 to 100%.
Yeah, it's fascinating because we work in technology as well, so we can see how it's affecting the coders here and how much more they can do. It's fascinating. Yeah.
How will this affect equity markets in the end? Then how does this impact it?
Put in the early 90s. So here it is. It's happening finally, and it's going to upend traditional financial services. Energy, with battery technology evolving as rapidly as it is, and the electrification of transportation, we think oil demand has probably peaked and is on its way down. In the industrial world, we're going to see a massive increase in productivity because of robotics. We're getting to the point with robotics and humanoid robotics that a lot of the dangerous and really very boring jobs are going to be taken over by humanoid robots. And the sophistication that we're seeing there, again, thanks to AI, is remarkable, just remarkable.
So if you could touch on the themes you think are going to benefit the most from AI, you'd say robotics, autonomous vehicles, things like this.
Yes. So it's again the platforms coming together. A lot of people will lease their Teslas and leverage off of Tesla's platform. So it's a win-win. It's a SaaS model. It's a software as a service model. So many people think that Tesla's gross margins will be lucky to get to 25 or 30%. Yeah. A SaaS model is an 80 to 90% gross margin business. So that's where the big surprise is going to be in Tesla. It's not a low margin company. It's going to be a software company effectively. Yeah.
So a percentage of the people that own Teslas will sign up to this Tesla software that will allow them to offer their car out for people to sort of rent.
Yes. And many Teslas are already equipped with the software that will be upgraded over time. And so, yes, go to work, let your car. Meta Platforms is doing so much in AI. They're putting out their open source models. They're really helping to power the ecosystem. We think they're in a very good place to be the beneficiary of the shift towards social commerce.
And are there any smaller AI companies in particular you think could be the ones to watch over the next 5 to 10 years?
Yes, we have a venture fund, and one of the first names we put in there was Mosaic, which helps to fine-tune smaller models. Databricks just bought it, so now we own Databricks, but we think, and that's in the private world, and we think that's a powerhouse. When we think of smaller AI names that will benefit from AI, that's the lens we're applying to every stock as we put it into the portfolio. And so UI or outright. And then the most important thing is what I just said, that proprietary data that no one else has. So I'll flip back to Tesla for one sec. Tesla has more real world driving data, many orders of magnitude, real world driving data out there than anyone else. Why? Because it has 5 to 6 million robots out on the road today collecting that data and sending it back every day. I have 2 of them, a Model Y and a Model 3. So it's a very powerful model. But that data is what companies, that's the secret sauce here.
Yeah. And it's also a really interesting time for blockchain and Bitcoin,
Yes.
which I know, is big as ARK as well. Obviously, yeah, an important milestone because it's the start of a history of a new asset class being created. In parallel to this, Bitcoin's perception as a risk-on asset is sort of shifting. Can you give a sense of how that narrative is changing and what's ahead for Bitcoin?
Sure. Yeah, a big wake-up call for the into one of these new asset classes, into your existing portfolio. The return per unit of risk goes up because of the diversification and the low correlation to other assets. And so a lot more advisors and investors are taking it seriously now.
Mm-hmm. Yeah, I mean, it's a stamp of credibility that's sort of positioned it as something you can't ignore anymore. So,
well, even though Chairman Gensler was, pulled kicking and screaming to the altar, he actually did it.
Finally got there. And then I just had a question about Coinbase because the ETFs going live obviously mean that there's a potential for some of the revenues of Coinbase to go into the ETFs rather than through as fees for Coinbase, which is its primary revenue channel. Do you see that affecting Coinbase long term, or do you think there are other areas where it will succeed?
Yeah, we had already always assumed that the spreads, especially in the retail sector, which were very high for Coinbase, were going to come down dramatically because of the Bitcoin ETFs, which plays on disruptive innovation. Then you would get in sector tech funds. And one of the reasons is something you didn't mention, which is the multi-omic sequencing, which is going to transform healthcare as sequencing and artificial intelligence converge with CRISPR gene editing to actually cure disease. So our ARKK is our flagship strategy, and it will be soon, we hope, with regulatory approval in Europe, be heading for Europe as well, with our partner ARK Europe. So excited about that. And then we have more specialized portfolios. One is the next generation internet, which is focused on AI and blockchain technology heavily. One is the multi-omic sequencing revolution, or I think we still call it the genomic revolution. We have to change the title there, but that's ARKG. The is 5%, maybe 8% at tops. So you've got 92% diversified exposure to truly disruptive innovation, whereas the big broad-based benchmarks really are made up of companies that have been very successful historically, but may be disrupted. So we are a very good hedge against the possibility of that. So many use our strategies as a hedge against the disruption elsewhere in their portfolios. And others just allocate to us because they know from their own lives that we're talking about the way the world is going to work, not the way the world has worked. And just to close that off, when I was trying to explain to someone why I needed to start ARK 10 years ago, and this was someone not in our business, he ended up saying to me, so you mean that the future of investing is investing in the future? And I said,